Hello and welcome to the CSBP Market Update. My name's Aiden Boyham. I'm stepping into the hot seat today for Gray Johnston. Joining us on the CSBP Market Update, as always, is Ben Sudlow, our Sales Strategy and Reliability Manager. Ben, how are we?
Great, thanks Aiden. It's nice to see you in the hot seat today.
Thanks for having me. Let's start with phosphates then, Ben. The MAP and DAP price has come off a bit recently. Can you unpack what's happening in global markets and, giving us a local sense of what it means for growers as they're sitting out on the header at the moment?
When I last spoke with Gray, phosphate prices were drifting down, and look, they've continued to slowly edge themselves down a little bit, but the pace of decline has probably slowed since we last met. And look, the main reasons why India, who'd been taking a lot of demand over the ensuing 6 or 7 months, they'd never really caught up with their inventory, and they were continually buying just to keep up with the demand. They've now started to build stock again, and a lot of the other key market drivers, North America, Brazil, those markets are not taking volume. So there's no real market demand to take volume, and in that case, suppliers are sitting there just trying to place volume into demand that's not particularly strong. So prices have just continued to drift down slowly through to where we are now, and that's probably been reflected into our prices just slightly edging down $5, $10, $15 a week over the last couple of weeks. We've seen this over many years where when prices fall down, let's talk globally to begin with, suddenly some of these markets come on, and it's like when you catch the falling knife situation, the prices go down and suddenly markets come in, Brazil suddenly comes in or India come back and start buying again, demand returns, there's been a hollow out of demand totally for a while, and suddenly it in, and then the suppliers goes, right, it's on, and then prices start moving up. And when they move up, everyone goes, Christ, the bottom's in, and everyone wants to rush in quickly and get a price before it start ratcheting up as the demand returns. So that, we've seen that many times before, and if you think about it from what that means for the local market, let's say there's 500,000 tonnes of ammonium phosphates of various sorts that get sold into the West Australian market. And those cargoes are now being purchased. Let's say there's 3 or 4 cargoes that are across the market that are here or getting sailing towards WA or they're here now. There's a whole lot more to come between now and let's say March, April, when the last vessels arrive. So as prices go down, they probably turn, and if they do, everyone jumps on to buy it thinking they get at the bottom. We then go and say the same thing. All our growers go, oh, okay, now the bottom's gone, or maybe gone, and they all jump in. But what if that happens now? We and the whole market cannot price 500,000 tonnes all in the space of a week or a day, and then there becomes a limited supply to price farmers forward for the volume that they need into next year. So this idea that market turn, suddenly there's not available tonnes, and then what happens is everyone's chasing tonnes. People don't want to sell short, we don't want to sell short, and we just got to hold back until we can get more price cover. And that's not just us, but that could be across the market in general. So in those circumstances, it becomes limited tonnes available, price moves up, everyone wants to come in, and then we're limiting volume out to customers who want to price forward. So that's the dynamic that we've seen in falling and then quickly rising markets before. And should that happen in the local market, the message is, like I spoke with Gray last time, just take a little bit of time, allows us then to price and forward cover, and then we can try and keep ahead of that demand.
So you've explained the falling knife, I guess, scenario, if you will. What exactly are we saying then? What are we recommending growers do in light of these current market circumstances?
People have got to do what they've got to do, but I think what I would suggest that people look at is, like with many things when you're trying to catch a falling knife or trying to predict a market, is often the best strategy is dollar cost averaging over a period of time. And if you lead up to Christmas, is it sensible that you consider putting hedging in 20, 30, maybe up to 50% of your volume pre-Christmas? It allows you to dollar cost average and then hopefully try and get ahead of what might be a turn in the market that you then can't get the volume that you might otherwise want.
All right, great summary there, Ben. And if you are ready to commit, get in touch with your local CSBP account manager today. You can jump onto our website and you can see the latest list prices on a range of products. And if you are in the position ready to commit, we also have a campaign out at the moment where you can go in with a chance to win a K-Till tinny. So while you're on there, check out the terms and conditions of that competition. Shifting to nitrogen now, Ben, it seems there's 2 different stories unfolding globally, east and west of the Suez. Could you tell us, what's happening there and what does it mean for growers locally?
Right now, there's not a lot of urea being bought for the domestic market. Most of that really happens, through into the first quarter of 26. So last time we spoke, there'd been a tender into India, and we seem to talk about that every time. That got undersupplied. I think it was 2 million tonnes, about 400,000 tonnes got put in. And the view was that prices were starting to move down on that. The view on that, straight afterwards, China said they were going to come back in with volume, and the market then sort of started to correct down. Then the rumour came out that China wasn't going to put quite the same volume in, and then the market just re-corrected back up to where it was, which is around that low $400 a tonne Middle East. And that's sort of the benchmark index for Australia. So that's one side of the market. Let's just remembering that price of, let's say low $400 a tonne. On the other side, being product going into Europe, sort of west of the Suez. Expectation from the market over there that CBAM was going to become enforced on the 1st of January 2026. Now that's Carbon Border Adjustment Mechanism, which meant that after that time, effectively becomes a carbon tax for urea coming into that marketplace. So what a lot of the buyers over there are doing are saying, well, if I can buy it before the 1st of January, I can avoid effectively buying a high cost product. So a lot of the European market...
sheds now.
Exactly,
yep.
Yeah, and wouldn't you? You think, okay, well, everything else being equal, if I buy before the time or buy after, it will be cheaper if I buy before. So they're rushing to get product out before the end of December. And therefore the benchmark being the Egyptian price was just over $500 a tonne. So you had this massive arbitrage situation where you got Egypt at $500 a tonne, Middle East at $400 a tonne. And then, of course, the Middle East can suddenly think, oh, we can supply into this market and still make some money. So there's this big disconnect at the moment. But as time evolves, that sort of will recorrect as we get towards the back end of December. And even now, the wild card that we're looking out for in the next 2 weeks is another tender comes out. India's come back again. They're looking for now 2.5 million tonnes of urea. That tender closed on the 20th of November. And what does pricing do around that? Does China really come back in and put another 200,000, 400 or 600,000 tonnes, and how does that affect the price in the near term?
Yep. Just on Flexi-N, UAN, anything we need to know about there, both globally and in a local sense? I know yourself and Gray talked in our last market update about some exciting Flexi-N storage developments that had happened or were in the works across the state for CSBP.
Yeah, so we're making now, we're importing now. Again, prices are compelling into this market, particularly in the southern hemisphere market. UAN prices or Flexi-N prices are very well priced. And one of the other thing on our manufacture, we've started building and started to fill a extra storage facility in Geraldton. We put another 5,000 tonne of storage up there. That will allow us to meet greater peak demand. And we're just commissioning that storage facility now. And we're looking at doing something similar in Esperance, which should be in place first quarter of next year as well.
All right, rounding off then, Ben, with your third favourite child, potassium. What's been happening in K markets at the moment?
Just to be clear, Aiden, K is my favourite child, but it always seems to come last in the order. But you did put P before N today.
That's
which
right.
Threw me a little
Mixed
bit.
it up a little bit.
Look, there's not a lot going on in potash at the moment. We're manufacturing. We're getting some local SOP, which is West Australia made SOP, being supplied now, which we're putting into our manufacturing of Macro Pro. That's exciting. But in general pricing movements and global pricing, it's just flat. Things haven't really changed, and our outlook price for that is probably not to be much different over the next 3 or 4 months, and that pretty much will set the price for 26 anyway.
All right, fantastic. Well, we've covered off on NP and K. Is there anything else that you wanted to address?
Quickly touching on, which we're getting a bit of questions from the marketplace. This is the first full year vast quantity or quantities of ammonium sulphate, or this crystalline or sugar-grade ammonium sulphate, has not been readily available. The history of this is this has been a byproduct that's come out of nickel production or BHP nickel production. Now, they shut their plant back September last year, but they still had some product of the ammonium sulphate they were getting rid of at that time, and that sort of flushed through the market last year. But without them in the market, there's been this very limited supply of sugar ammonium sulphate this year. What that means is no supply of that, no use of that for manufacturing granular that we've manufactured before. That has meant a supply of ammonium sulphate granular is going to come out of our export market. And that means the difference between a crystalline price or product, and a granular from the export market is very little different. So the sugar volume, and that could have been 150 to 100, nearly 200,000 tonnes of sugar, now won't exist. That will need to be replaced by either imported granular ammonium sulphate, or some of our area managers are talking about, okay, well perhaps that means we need to change our strategy around how we manage nitrogen and sulphur, and particularly sulphur. Does that mean there's a change in how you use your cropping compounds, or how you come back with your first pass of N or NS to try and balance up your sulphur need in your other products? So that's the first year we're experiencing now of quite a different change in the supply dynamic of ammonium sulphate into the West Australia market.
All right, well, thank you, Ben. We'll leave it there for today. I think we've covered a fair bit. Thanks for joining us, and thank you for being part of another CSBP market update. We hope harvest is going well for you, and we look forward to joining you again soon. Bye for now.
This podcast is provided as general information only. The content of this podcast is not a recommendation and has been prepared without taking your objectives or circumstances into account. Before acting on the content of this, you should consider its appropriateness to your circumstances and seek independent advice.